Hello, everyone, and welcome back to this week's EWO Trader Live. My name is Zach. It's great to be back with you all this week. Lots of exciting topics to discuss. I'm very excited to discuss them with Rob, and I'm sure you guys are all as well. We have a disclaimer agreement we have to cover just briefly into every live session or live webinar that we do, and that's that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice in any of these live sessions. We have this available on our website, so please feel free to read that in detail at any time at your leisure there, or feel free to ask support, write in, or do anything around that. But that's the main gist to take away from it. All right, so before we bring in Rob, the market news to start the week was actually announced on the close on Friday regarding some changes to the S&P and the upcoming rebalancing. And all that has to go with that. So I'm excited to discuss that with Rob. SMCI will replace Whirlpool as the main one. That's big in that news. And then the cryptos are also on fire this morning. So very excited to hear Rob's analysis on that. Let's go ahead and bring in the man of the hour who we're all here for, Mr. Rob Roy.
Hey, Zach. Good morning. Happy Monday to you.
You as well. This is best start in my opinion.
Sounds good. I appreciate that. Yeah, not a whole lot of news going on, but you hit the highlights of it with the S&P rebalancing that was announced after the close on Friday. The main one being, there's only a couple changes, but the main one being, as you noted, SMCI is replacing Whirlpool in the S&P 500. So if we take a quick look at the chart of SMCI, I almost feel like that's more important than what's going on in the market right now. Get you a updated price here. You'll see that SMCI is actually flying in this morning's trade. There you go. Talk about a gap up. As you know, I don't like the gap ups, but that's pretty impressive. Maybe it gets a little bit of a rest if you wonder how this process works. If a stock goes into the S&P 500, stock has to go out. So Whirlpool's going out, and it moves into the mid-cap index. So S&P moves in, or Super Micro moves into the big index, the S&P. And what normally happens is you get this big surge like this because all those tracking devices like the SPY, et cetera, have to buy the stock to put it into their ETFs that match the S&P. And so that's where that big bid came from this morning. And then it usually kind of levels off a little bit. So I don't know if there'll be a whole lot of follow through from this. Up 200 points already is a pretty big move. But that's what tends to happen. You get this big surge, and then there's a viewpoint in the marketplace that you continue to rise into the actual rebalancing, which I believe is on March 18th. But that's not how it normally works. Usually the big surge of buying comes in, and then we just kind of go flat. So I feel like that could be the end of the big move for Super Micro, but we'll see. It's been a super stock. How about that for a Monday morning, Zach?
I like it.
But we'll see if it continues to rise. But I would say that this vertical movement, this rocket ship ascent that Super Micro has had, probably will come down just a bit after that move. So let's get to the S&P and take a look at what's happening with it. Not a whole lot is going on with the market this morning. You can see we're just kind of flat. The Dow's down a little bit this morning, but we continue our move to the upside on this 45-degree angle, and that's what you want to see. Again, if you're bullish, I know based on the comments from the weekend update, there's a lot of people that are just confounded by the fact that the market continues to go higher. But I think it's important to note that the market is looking ahead, and it's looking ahead towards rate cuts after that PCE report came out last week and was showing that things weren't so bad, at least on the Fed's favorite inflation indicator. And that's going to keep a bid under the market. Now, it's normally like a buy the rumor, sell the news. I think people were looking more for a correction now and then a run up when the Fed actually starts cutting rates. I would put out there that perhaps it's the exact opposite, that you get the run into the rate cuts. And when the rate cuts come, it could be a buy the rumor, sell the news type of thing. at that point in time. The markets usually don't move the way everybody thinks they're going to, or if there's too many people on one side, then the market goes the other way. But in our opening graphic here, you saw the Qs still waiting to see, and obviously this has a bit to do with rates this morning, which we'll look at in a second, that the Qs are up, but that still a wave 5. Keep waiting to see if that 5 is going to relabel to a 3, but every time we make a new high, the 5 just moves over. And so that's interesting as well. But once again, we're moving, following this vertical part of the move to start the impulse pattern. We've been moving more along the lines of 45 degrees. So that's positive. But the fact that the S&P is still in a wave 3 and the Qs are still in a wave 5 is a little perplexing. They normally come into conjunction with each other. I think that's likely going to happen at some point in time. We can talk about Tesla in a bit too, Zach. I think there's
Talk about.
some negative.
Sorry, Rob. I was just saying, lots to talk about there. Absolutely.
Yeah. Well, here's the rates that, even though it looks like a down bar, they're slightly higher than yesterday. But in all, you can see that there's a rollover in rates as they appear to be moving towards the downside here. So as rates continue to creep down, that's going to keep a bid under the market as well. So I think we have the duo of looking ahead towards the expected Fed rate cuts, along with rates being supportive. And there you go. The market tends to go higher in those scenarios.
Very well. Well, thanks for diving right into it. That was definitely some interesting charts to go over. Basically, just a quick, succinct review of everything that's happened since Friday that you mentioned. So let's go ahead and go into a hypothetical question here from Leonard. Let's say you bought an option. I'll randomly choose one of your previous recommendations, MSTR. Say we bought it at $8 and sold it half of it a week later at $16. You then went out of town and forgot a few days until later, and then all of a sudden the option was at $50. Then today you notice the option was at 220, and then hypothetically you're at 100,000 of those 5 remaining options. If this were to occur, you continue to hold or sell. I hope one day to have this happen, and I'm curious what should do on the high flyers.
Well, that would be great to see something occur like that. But the main gist of the question there, I believe, is that when you have something like MSTR, and clearly we got out of it in our alert too soon, but you get a 100-point move in a stock in a day. You have to remember that we're not trying to catch the bottoms and the tops. We're trying to catch a piece in the middle. We don't always get it right. We get it right a lot, but we don't always get it right. And so alternative thought would be to take part of the position off. But we only sent out one call option because it was $800 plus, which is a bit more than our risk profile here at EWOTrader.com. We try to keep things around 500, so that had to go in the speculative portfolio because it doesn't meet our guidelines. That's what the speculative portfolio is. But you can take part of a position off. A normal rule of thumb is, let's say you had 2 contracts and you get one that has a big gain, and you can take one of them off and take all of the risk out of the trade. And then you hold the other one, and if it continues to go higher, then all that is pure profit. You have no more risk in the position at all. You can only either break even or make a gain. If it were to fall apart and go back down to 0, which probably isn't going to happen, but had it go back down to 0, you didn't lose anything. But then you're still in the position to gain some. Another way that you can do that is, instead of taking a position off, let's say that we just bought the one option, another thing that you can do is sell a higher strike call. So you get the run up, you sell a higher strike call, you're still in a bullish position, but now you have some protection. If the stock comes back down, you could buy back the short call, and you actually would make a gain from the difference of what you sold the higher strike call at from what you bought it back. So there's 2 different ways of managing profits along those lines. We made the choice because it was such a big gain in a short period of time just to take the profit and be done with it. But in longer term management styles, those are two things that you can do. And I would encourage people, if you get a big run up, if you're going to take part of the position off, make sure you take it off at least at break even. And so that you've taken the risk out of the position by holding it. Because, let's be fair, if we're staying in a position that's already had a really nice gain, you can let the greed come in a little bit. But those are two ways to manage positions along those lines where you can stay in, but maybe add a little bit of protection. Wow, what a
Absolutely.
good question. Things off.
I was just going to say, yeah, that was a very, very helpful insight to start this session off, and it was interesting that you shared both those scenarios there and how to manage them. And I just wanted to add into your thought there on it's hard to fight our own greed, our internal greed of watching that chart and watching that return climb. You want to just you wouldn't want to just watch that number go up, but at some point you have to stay disciplined and accept that any profit is a good profit. No profit is bad profit. So anyhow, I'll stop with trying to make my Zachisms. Your Robisms are what we need. So let's go into some crypto. I've been excited to talk to you about it. I'm watching the charts all weekend. Maybe it'll be a good segue to start out with coin before diving into the all others.
Okay. Yeah, I imagine that you got a smile on your face, not only over the weekend, but they're flying again this morning as well. With the end of day charts, we won't see today's move in Bitcoin, but we can see the move today in Coinbase. And yeah, that's pretty impressive. You would expect that to occur on the back of the movement that's going on in Bitcoin. One of the things that I notice here on this chart of Coinbase, not only is it in a wave three and we have a target up around 260, we have a huge zigzag here within the wave three. And as most people know, that's my favorite pattern. So we've got a 61.8% spot on correction there. And then the extension would be expected to be 100% on a 61.8% fib retracement. So when you see that, the question becomes, is that it? Is 100%? Because remember, when you have a zigzag pattern with a 61.8% correction, 100% is the target. But we can always go up to the next target, which would be 61.8. So we have a chance to go all the way to 61.8. And that's when we bring in the DMI. We look at the DMI to see what is the likelihood of that occurring. Could we continue higher? And that's about as constructive of a DMI as you would ever expect to see. The ADX is moving up. It's not quite to 40. The positive directional indicator is moving up. The negative is moving down. All that looks very constructive for a move up all the way to the 161.8% extension in Coinbase. And as long as Bitcoin continues on the run that it's in, all the crypto world continues on its run, I think that there's a high likelihood that we do see 300 on Coinbase, and we're only down at 222 even right now. So I do think there's more meat on the bone, as they say here, for Coinbase. With the gap up today, I hate all these gaps, and we want to kind of get an idea of whether or not we're going to come back and fill that gap. Notice these here. We came right back down and filled this second gap, but we hadn't filled this first one yet, and there's still a tiny one here. That could be well into the future. As you know, the vast majority of gaps get filled, not 100%, but a high percentage of gaps get filled, but they don't always get filled right away. And that's the drawback, is that we don't know when they are. And if you wait for the gap to get filled, you might miss the entire move, because it could be well into the future by the time we get those gaps filled. We're in the run into the halving that occurs April 18th. So I don't really see the catalyst. Perhaps we can get a quick drawback to fill that little gap there. Maybe not. It might just continue to run into the halving, because if we look at Bitcoin, Bitcoin is above 66,000 at the time we are speaking here. So we've moved up a bit on Bitcoin, Ethereum, and I know that makes you smile. Zach is having a big day today as well. So it's up about 100 points right now. Yeah, all is flying in the crypto world, and that can only be constructive for Coinbase, I think.
Sure, seems like it. It seems like the whole riding coattails would only be plausible for coin with this bullish run that we're seeing in the cryptos. And with that, do you think that this is it? We're off to the races now, or I know I've heard you speak of a mild recession just in the general market, with the potential of that rather this year. Do you think that has any effect on crypto? Do you think we pull back a bit before we really go off to the races, or is this it?
Well, one thing that I was reading over the weekend is that the U.S. is adding $1 trillion of debt every 100 days. So the amount of debt that we're adding, we've talked about this during Trade Finder, we've talked about this during our insiders meeting, et cetera, the amount of debt that the U.S. is carrying. But I was stunned to see that, as much as I know about the debt, that it's accelerated that fast. So $1 trillion every 100 days we're adding to the debt. And I do think that at some point in time, it's going to have an effect on the dollar. So far, it hasn't. So if I bring up a chart of the dollar, you'll see the dollar has been hanging in there pretty strong. And there you go. Holding right around that 104 level. These are because it's the past contract. I can go through and fix that, but I won't right now. The key is just the dollar is staying pretty firm here in this range around 104. I don't know that we can continue that with the amount of debt that we're adding. And my point here is that people are going to be looking for alternative currency sources. And Bitcoin is a digital currency. When it first came out, I, for one, I know, Zach, you were ahead of the move. I'm an old dog, so I don't vision digital currencies and stuff like that. I'm more looking for let's go back to the gold standard type of thing to quit printing money. But those types of things are going to come more into vogue. And so the answer to your question is I think this move, specifically in Bitcoin, because that's the big dog in the crypto world, is going to continue into the halving. And then when people think, oh, now it's going to take off because now there's less Bitcoin available, the whole supply demand curve, I think, again, it could be a buy the rumor, sell the news thing. So I think we're kind of running into the news. And perhaps when we get to the halving, when people think it's almost like a stock split, right? That normally when a stock splits, it takes off and runs because it becomes more available. The price becomes more attractive to the majority of traders. But I think that could be where we see a little bit of a correction. Anytime you get these vertical moves, Zach, we've talked about this so many times on these shows that you're subject to a correction. So one could occur. I'm not the most crypto expert on the planet, but I do think that this is a bid. If you look historically, and that's all technical analysis is analyzing what's happened historically and try to formulate an opinion of what could happen in the future based on the past. And every time Bitcoin's done one of these halvings, it's run into it, and I don't see any difference here.
Very well. Well, we will certainly see how that plays out, and I'm excited to watch it with you. I think you're only right. I mean, what often goes vertically up often comes vertically back down, and with the volatility in crypto, it seems like that's feasible at any point. So we will certainly see. We had an anonymous attendee bring up another bullish chart, another good day for gold on the metals. So, what are our thoughts there? Any association going on, or what do you think's causing this run?
Well, I think it's what's going on with gold is inverse to what's happening with interest rates, and they're correct. There's a big move to the upside with some follow through today in gold. The key here is that we have finally broken out of this resistance area around 192.5 or so. You can see we hit it back there in December, again in the end of December, got in the area there in January, broke through it on Friday, and we're following through today with GLD. And I think as long as, they're related, they're correlated. It's one of those market correlations that exist. Even though rates haven't gone down significantly, the viewpoint is rates are going to go lower. And so as rates go lower, that should keep a bid under gold. But now that we're up here, I don't see gold at least the GLD stopping before 200. I think that's where we're going to go. It's that Star Trek tractor beam effect that I talk about all the time, Zach. I think that you get this high, those big round numbers just kind of draw the stocks to it. Now, whether it happens right away or we need to take a little bit of a breather, you can see that we are getting just a bit overbought here, at least away from the 10-day moving average and with that gap. But I think that GLD goes higher and hits 200, and then we'll have to reevaluate and see from there where we may go.
Yeah, no, I love your Robisms there with the tractor beam effect. It really makes it clear when you illustrate it on the chart. At the bottom of that line looks like a UFO. You can picture it just bringing that bar all the way up. So, no, it really does help with the analysis. And all joking aside, so I appreciate those, and I'm sure I'm not the only one that says that. So let's go over to SLV. Let's see what's going on in comparison to GLD.
Okay, so silver and gold normally move together. They haven't been, as you can see from the chart of GLD, but they are now. We have we had an ascending triangle in the GLD. We had a descending triangle in SLV. So that's kind of unusual. We've talked in the past about how originally GLD was big brother and SLV was little brother. And then it seemed to change as the talk of how much silver is being used in electronics, etc. And SLV seemed to be leading and GLD following. Now we seem to be back in the original mode. We are getting a bid under SLV today, and you could argue maybe the potential for a higher return here on SLV as it plays catch up. That would be the interesting scenario there, because the resistance level that GLD just broke out for SLV is way up here at 23. So it's got a ways to go before it breaks above its resistance level. So yeah, a speculative trade here could be going long SLV as it follows along with that move in GLD and tries to play catch up. So I think these metals are kind of the same scenario with Bitcoin. Not only do the metals move inversely to interest rates, but in addition, maybe there's a slight bid from the whole debt situation. A lot of people talking about it. Jamie Dimon, a lot of bigwigs in the financial area are really concerned about the amount of debt that we're carrying, and if that could come crashing down at some point. And then obviously gold and silver is where you want to be, maybe Bitcoin.
Yeah, maybe, and that'll be an interesting world when we're all digital. And it sure seems to be moving that way at a pretty rapid pace. I wanted to ask you about what's going on with Apple. They released their new M3 chips, the new MacBook Air, and it seems like that'll be something that I won't speak out of turn here, but the loyal Apple subscribers will jump on.
Yeah, Apple's got some negative news today too, though, with some regulatory stuff, and there's danger here of breaking below this 180 level. We talked about this Thursday night during the insiders meeting that Apple needs to hold 180. As you can see, it's broken below it significantly. Let me take the Elliott wave pattern off so where you can see that bar. That's not good. We kind of tested breaking it on Friday, and now with the negative news over the weekend, we're coming down. I know the Mac heads, as you were speaking, Zach, want to just be a long-term believer here. But my thing is that there's just there's no new innovation, a new chip, whatever. But they abandoned the electric car. They gave them a one-day bid, and that was back on the 27th of February. And that was it. That's all they got out of it. We went right back the next day. So now here we are at the next level of support at 175, which is where we're trading currently today. We do have further support down there at 170. It seems like we're a little oversold here, but I don't think testing those lows at 170 is out of the cards for Apple. I really don't. And then that's a scenario we don't even want to talk about in the world of Apple, Zach. That's the old, what is it?
AVTD. And man, what if that happened to Apple?
Yeah, that's a Katie bar the door scenario if we don't hold 170. Now that's we're not there yet. So I'm not trying to be a sayer of doom here. I'm just saying that we need to hold on Apple in this channel here between 170 and 180. I've often said that Apple is the one stock I'm afraid to short because of the fact that they have so much money and they can get really aggressive at stock buybacks at any time. They already are aggressive in stock buybacks, but they can get even more so if they feel like their stock's getting undervalued. And so that could create short covering rallies if they come in and buy strongly. So I'm not saying that, we're going to break 170, but it just seems like some of the shine has come off of Apple right now, and we could come down and hit 170. While we're talking about shine coming off, Zach, I wanted to bring up Tesla and show that chart as well, because here's
Yes.
another one. Go ahead.
Oh, no, sorry, Rob. I didn't mean to come over you. I guess there's a bit of a delay there. I just was saying, yes, that definitely falls into the same category there.
Yeah, we were talking Thursday night during Insiders that Tesla needed to hold 200. The news that came out this morning on Tesla was that they are um, shipping far less cars to China, and that's because China has become so aggressive in their own EV space. They're not buying the Teslas, and so Tesla announced they're not shipping nearly as many cars. So obviously that hurts demand and purchases. And so today, so far, we'll see where things close. We've got a par below that 200 level. So we went sideways there, haven't been able to hold it. We're breaking down below it. And I think that means that Tesla likely comes down and tests these lows at 180 here. So China's such a huge market. As I said, they're aggressive in their own EV space. And that news that Tesla came out with this morning saying they're not going to ship as many cars is having a pretty negative effect on the stock.
Absolutely. It looks like rocky waters for both Apple and Tesla right now, and it'll be interesting, to use your term, to see how they navigate those waters. Sabil said, thanks so much for the gold medal update. You gentlemen are absolutely awesome, and I just wanted to say thank you for taking the time to share that. As we've highlighted before, people are more encouraged, or let's say more incentivized, to share negative feedback than they are when they're happy, and to share positive feedback. So we greatly appreciate when people take the time to do that, and glad to hear that you feel that way. So I greatly enjoy these sessions with you, Rob. Look forward to it every Monday morning to start the week up. And I think if there's anything else you'd like to cover, we can go ahead and go over that. Otherwise, we might send people back over to their trading desks and into the markets.
Yeah, I wanted to cover a couple closed trades here before we go that we closed out for our alert subscribers just this morning. Both of these were closed out this morning. This one was on OKE in the Impulse AI portfolio. Hit our target. The price target right there is 100% extension. You can see it gapped up today, fulfilling that zigzag pattern. We still have the opportunity for it to move higher, but without it. And so when your target's reached, you want to close that out. It's getting a touch vertical and it gapped up. So for those factors, didn't want to just kind of hang around and see. The DMI is still a bit constructive. So we could move higher in OKE, but we'll watch and see if maybe we settle back in. If we do close above that 100% extension with follow through, then we can always enter a new position to catch the move from the 100 to the 161.8% extension. That's always a possibility, but it's getting, the vertical move, the gap, those came into play. You can see where the 10-day moving average is way down here. So we're overbought, and you want to take that gap up every time because that's an infusion of IV. We also closed out Kroger this morning. We had listed this as a zigzag to the upside. You can see the 100%. It looks like it's trying to move higher, but there's resistance right there at 50. We noted that on the chart on the entry of this, and this was our price target here as well. So both of these stocks hit our price target. When your trading plan is fulfilled, you want to go ahead and follow it, and that's the point where greed that you and I talked about earlier here, Zach, can play in if you want to hang around a little bit too long. Once again, going just a bit vertical here. and a point where could act as resistance. And we'll see. It kind of backed off that level this morning after it hit it. So can it break above it? If it can, then maybe we get another run. Also, a constructive DMI still, but note that the positive directional indicator had come down, but it's trying to turn around with today's move. So we'll watch this resistance area. We can always re-enter this one and move to the 161.8% extension here as well. And finally, one thing that I wanted the folks to keep an eye out for, we have a potential of an alert that'll be sent out today. We're going to watch this one a little bit more because, again, the vertical blast off here, and we're right at this area of resistance, right around this 70 level. It is kind of crawling to the upside on AAP. Let's see if I can get you today's move here. Started a little flat and then it's crawling up, but it hasn't broken the 70 level just yet. And you can see there it hit it on the high and then backed off a bit. So we're watching that. And then when you look at the DMI, you can see that it's trying to move up. It's interesting here that the ADX is moving up, indicating strength, but the positive directional indicator kind of moved down. So we're going to watch that throughout the trading day. So towards the end of the day, maybe this afternoon, depending on how it continues to trade, you might see an alert on that. So I wanted people to be aware of that. But with that, that covers everything I wanted to do. I just wanted to also add in the whole catch-up thing. We talked about that with SLV, maybe catching up to GLD. And we could have the same thing with Advanced Auto Parts because there's O'Reilly Automotive. Both of those are auto parts manufacturers. And you can see the move that O'Reilly's had, and Advanced hasn't had that. So does the stock play catch up there? And if you wonder, well, why does that matter? When sectors are strong, the way the money rotation works in the markets is the big investment people look for where are the underperforming stocks within that sector. And that's the whole catch-up thing. So money moves out of the ones that have been the leaders because they feel like, okay, perhaps the majority of that move has occurred. Money rotates into the underperformers as those likely play catch-up because normally the majority of stocks in a sector move together. Obviously, there's better run companies than others within a sector, no question about that. But when part of the sector moves, it tends to draw the rest of it along with it. So that's what I wanted to finish. So with that, thanks for hosting again this morning. It's fun to be with you. Hope everybody got something out of this. We value everyone's time tremendously, especially during market hours. And so we'll get back at the task at hand at looking at the market. And I look forward to seeing you again tomorrow night in Trade Finder, Zach.
Yep, I did echo that, second that. Take care, everybody. Have a great trading week.
Take care, everybody.